Welcome back to my channel. As the title says, we are going to look at the three basic price action movements most traders look for in the market. First of all, there are three kinds of movements that are present in the market. That's a downtrend, an uptrend, and consolidation. I'm going to explain them to you very simply for you to understand. So, an uptrend means price is going up, and a downtrend means price is going down. Then there's third type of movement available in the market, and that's called consolidation. That means a sideways movement in the market. So for an uptrend, this is I'm going to show it to you in simple terms. So for an uptrend, let's say price starts from here, it forms a high and forms a low, right? So the next time price starts to move upwards, it's going to go above this high, and when it moves back downwards, it forms a low. But this lower low is does not exceed the previous low. So what we are going to call it is going to be called a higher low. So price continues to move back up from another higher high, moves back down, but it forms the lower low. The next low is not going to be lower than the previous low. So this is going to be a higher low. Then it continues again to form a higher high. Then it forms a higher low again. And price continues to make this kind of pattern over and over again until you see a change in the pattern. That's when we'll say that the uptrend has come to an end. So a downtrend, basically a downtrend means price going downwards, right? So this is how you're going to expect it to move. So let's say price is going to begin from this point. So price is going to go down. Now it has formed its first low. Then to try to go up, but it will not reach the previous high it had made. So this is going to be a lower high being formed. Continues to go down again. Now, in case you've even noticed, price actually went below this low. So this is going to be a lower low. So price keeps on forming the same patterns: a lower high, a lower low, a lower high, a lower low, a lower high, a lower low, a lower high, a lower low. And this is what you'll be seeing every time in the market during a downtrend. There is this uptrend and there is a downtrend. Now, the third type of movement you see in the market, or you will be able to see in the market, is called a consolidation. So basically, what a consolidation is price not price going on moving sideways. It's not going up or down, right? So let's say price is at this point, tries to go down, but it doesn't go lower than that, and it tries to go high, it doesn't go higher than that. Then it tries to go down again, doesn't go high. It tries to go back up again, doesn't go up. It tries to go low again, but it stays in the same range. It stays in the same box for a while. Doesn't go up or high. It doesn't go up or high. Doesn't go up or high. It remains in a range. It doesn't move from one point to another. It just remains in this range for a long time. So I'm going to show you simply on a chart to see what I'm talking about. So the pair we're going to use is NZDJPY, just to show you how an uptrend and a downtrend and a consolidation looks like. So using our tools here provided by the application itself, the first kind of movement I'm going to show you is an uptrend, right? So the uptrend happening in this area is going to be, I'm going to describe it in this box right here. So as I told you before, during an uptrend, price goes up, forms a higher high, a higher low, a higher high, a higher low. Just as you can see here. Let's say price is starting from here, right? The price forms a high, and it forms a low. It forms a higher high. It has gone past the previous high. It forms a lower low. The lower low didn't go lower to reach the previous low in this area, but it forms a lower low. And it forms a higher high again. It forms a higher low. Then it forms another higher high. And price tries to break. Then price tries to come down below here, but it starts to consolidate for a while. It tries to break below, but doesn't break below. So it tries to form another high, but it couldn't form a high, then it starts to go downwards. That's when the uptrend comes to an end. But as you've seen in this box, price forms price forms a high and a low. Then the next high is going to be higher than the previous high. That's why we call it a higher high. Then it forms a low, a higher low, then a higher high, a higher low, a higher high. Then that's when the uptrend comes to an end, when it tries to break below the previous higher low. Okay, so the next kind of movement I'm going to be able to show you is a downtrend. And in a downtrend, I will choose this area where the downtrend actually starts in. Okay, so in a downtrend, price is going down. That's obvious. Anybody can know that, right? So price, let's say price is going to start from this point, right? It goes down, it goes up. So the next time it goes down, it's going to go lower than this previous low it had. So it's going to be a lower low. Then tries to come higher, but it doesn't exit the previous high. So it forms a lower high. It forms a lower low again. Price keeps on going down over and over again. By the way, we are using the weekly time frame on NZDJPY. It forms a lower low again, a lower high, then it forms another lower low. It tries to come to break this area, but it can't, so it forms another lower high. Then this is when price tries to go down, but it comes to an end. That's when the downtrend stops. So the next time we see it forming a downtrend is at this point right here. So this is the high, right? So it's going to form a low. Then it tries to come above, but it can't, so it forms a lower high. Then the next movement, it forms a lower low again. Then price tries to, it breaks above this previous high. So that's when we will say that the downtrend has actually come to an end. All right, then the third type of movement is the consolidation. So the best consolidation area, the place that tries to show consolidation, is going to be this area. I'll mark it out with a box in this area. So price is not coming above or below this box. It's not coming above or below this box. It's not coming above or below. Just to show you simply, it's this. So price is at this high. It tries to come below before, but it can't. It tries to go higher, but it stays in the same range. It tries to go below again, tries to go high, tries to go below, it tries to go high, but it stays in the same range for a while. It tried to break here, but it couldn't. It comes back in the same box. It continues to consolidate for a while, just coming high and low all the time, high and low, until it reaches this point, and that's when it breaks through this box. Then it goes way high. That means our consolidation area has actually come to an end. That means our consolidation movement has come to an end. And those are the three types of movements you can see in the market. By the way, this is not any kind of financial advice, but you're here to learn and show you. I'm here to show you and to teach you how you can see movements in the market, and how you can capitalize on them. Well, thank you for watching the video. I'll be I'll be releasing the next video after a week, so stay tuned and have a blessed December. Merry Christmas, everybody.